I observe, not instruct, for educational purposes only. Last week we explored my indicator known as the winds, a tool designed to help us recognize and navigate long-term trends with a certain degree of confidence. Today, however, we will approach the market through a different lens, one that is also focused on long-term movement, but this time through geometry, what I call flow geometry, a way of observing recurring structures and repetitive fractals hidden within the movement of the market itself. And by the end of this reading, we shall see whether the current structure strengthens or weakens the thesis proposed by the winds. Let us begin once again with Bitcoin on the weekly time frame. Most participants observe the market horizontally. We draw horizontal levels in search of bottoms or support, and tops or resistance. And as you can see, there is a reason why this approach has survived for so long. Because it works. Levels that once acted as support often become resistance in the future, and what was once resistance may later become support. This remains an important part of my own analytical process, but the market does not move only in straight horizontal lines. There is another way to observe the structures price leaves behind, the diagonals. Allow me to show you. Let us bring back our previous top and bottom markings. Can you see how there are pairs of bottoms and tops that move in visibly parallel directions? If we connect these points using fully parallel lines, a clear structure begins to emerge, and between those two outer boundaries, there is always a central line, a line often ignored by the market, yet one that frequently reveals important zones of tension within the movement of price. Now, let us pretend we do not yet know what happened next. Let us observe only the structure itself. In many cases, regardless of time frame, a parallel structure tends to break in the opposite direction of its inclination. This is not an infallible law, but it is a recurring behavior and one worth respecting. And in larger time frames, these structures tend to become far more reliable. So in this case, it would be reasonable to expect a downward break. And as we now know, that is precisely what occurred. What many perhaps failed to notice is that the market often moves in fractals, not because history repeats itself perfectly, but because collective behavior tends to echo through time. Recurring structures are natural manifestations of that behavior. And had I simply duplicated this same structure at the moment of the breakdown, I would have discovered a remarkably strong potential bottom. Not only that, the central line of the duplicated structure would also have revealed a major zone of resistance and tension. This would not have been prophecy, nor luck, only probability, guided by the natural geometry of the market. Now then, let us return to the present. Bringing back our original structures, we may notice that Bitcoin now appears to be moving within a descending formation rather than an ascending one. And if structures of this nature tend to break against their own inclination, then eventually we should expect an upward break, should we not? What I deliberately concealed from you until now is that Bitcoin is already attempting that breakout and resisting precisely at the central line of the duplicated structure. So the question becomes, will Bitcoin eventually find resistance near the upper boundary of this duplicated structure, perhaps near the lower boundary of the first structure we analyzed, or perhaps we have already touched the greatest resistance of the coming movement? So, what lies ahead? Bringing back the winds, we can see that price is once again attempting to overcome the red regime. But I know very well what that regime represents, and weekly regimes are not easily reversed. What fascinates me is how coherent these structural resistances remain with the context revealed by the winds. In recent days, I have watched optimism slowly return to the market. And if there is one thing I have learned throughout my centuries of observation, it is this. The market often moves toward the direction where it causes the greatest amount of pain. And so, if optimism once again begins to dominate the crowd, I shall expect further declines, and lower prices often become opportunities for new accumulation. I will remain watchful,